Welcome back, friends. Donald Trump's victory in the US elections has raised a specter of higher tariffs on China, but it may not be the only Asian country that faces this predicament. The Asian trading partners might, of course, try to deflect attention in various ways, for example, by shifting imports towards the United States wherever possible. If you recollect, in the Trump 1.0 era, we had a negotiating table between United States and China, where China had to eventually agree to import more from the United States and reduce the surplus that it had with the US. And that led to negotiations, and that eventually tilted the balance in favor of the United States. That's very smart thinking on the part of Trump. And while the US bilateral trade deficit with China has decreased somewhat since the Trump administration, deficits with other Asian exporters have risen significantly, and they may now come under increased scrutiny. With Trump and some likely appointees focused on reducing the bilateral deficits, there is a risk that in a sort of a whack-a-mole manner, burgeoning bilateral deficits could eventually prompt US tariffs on other Asian economies. A tariff, as you know, is a tax on imported goods, but it is not paid by the exporting country. So the United States tariffs will be paid by the companies who are looking to import products into the United States, raising their costs. Korea, Taiwan, and especially Vietnam have seen large trade gains versus the United States in recent years. And Korea and Taiwan's positions are reflective of their privileged positions in the semiconductor supply chain, while Vietnam has benefited from the redirection of trade from China. In 2023, South Korea's trade surplus with the United States reportedly reached a record $44.4 billion, the largest surplus with any country, with car exports making up almost 30% of all shipments to the United States of America. Taiwan's exports to the US of A in the first quarter of 2024 hit a record high of $24.6 billion, increasing 57.9% compared to the same period last year, with the largest export growth stemming from information technology and audiovisual products. Meanwhile, Vietnam's trade surplus with the United States between January and September stands at $90 billion. India and Japan also run trade surpluses with the United States, with Japan's surplus remaining relatively stable and India's increasing moderately over the recent years. Going forward, these Asian trading partners might try to lower their surpluses and deflect attention via various means, such as shifting imports towards the US wherever possible. Trade policy is where Donald Trump is likely to be most consequential for emerging Asia in his second term as the United States president. Trump's proposed tariffs are most likely to inflict greater pain on more open economies in the region, with Taiwan more exposed to that threat than Korea or Singapore. The banks and the various products that the United States can offer may be used as an offset to reduce the deficit that it is suffering vis-a-vis Taiwan, Korea, and other countries in Asia. US data shows that the US trade deficit with China narrowed to $279.11 billion in 2023 from $346.83 billion in 2016. So the trick seems to be working for the US of A. Although US trade with China dwindled following the implementation of tariffs in the first Trump administration, trade volumes were channeled to third countries such as Vietnam, Mexico, Indonesia, and Taiwan instead. But if you look at the supply chain, actually most of the components are still coming from China. We call it lengthening the supply chain. So in Trump 2.0, two things will happen. He will start noticing that trade is still going on in China or to China. And this is going to increase protection, not just towards China, but to countries that have bilateral deficits with United States. Regardless of tariffs, there could be continued pressure for the relocation of certain supply chains from China to Southeast Asia, India or Mexico in particular. So that's good news for India. And US President-elect Donald Trump has announced his intention to impose a blanket tariff ranging from 10% to 20% on all imports, along with additional tariffs of 60% to 100% on products imported from China. You can expect United States to impose additional tariffs averaging 20% of Chinese products in the first half of 2025. How will this whole equation play out? Which countries and which sectors and which companies will benefit from the Trump 2.0 era? Do join our Prime or Prime Plus groups. We'll tell you about this, and we'll also give you predictions about where the Dow, S&P and NASDAQ are headed. And you can do that by WhatsApping us on 982-086-1044. You can join our Prime or Prime Plus Telegram groups, which are specifically addressed for the US markets. For the Indian markets, you can join our Premium Plus, which gives you 10 to 12 days predictions in advance, plus very good knowledge about some good multi-bagger stocks which can benefit immensely from the Trump trade. Happy investing. Number to get in touch, don't forget, 982-086-1044. Happy investing. Take care. Bye-bye.